while we've got some time here, I want to take the exact same information we did, our various examples, and see how these transactions are going to affect the debt service fund. The debt service fund is what kind of accounting measurement focus? Current resources, which means modified accrual. So that means we do not have long-term liabilities or long-term assets. We have current resources, which means we pretty much treat things as expenditures. In for-profit accounting, when you pay off a loan, you debit the liability, right? You credit your cash, you debit your liability. We don't have long-term liabilities in a government fund, so we're just going to debit an expenditure, right? Any questions? A city establishes a debt service fund to account for a serial issue of $100 million, 6% bonds sold at 102. Principal is to be paid evenly over a period of 20 years, beginning at the end of year 1. Of bond proceeds, $2 million is to be placed in a reserve for payment of principal and interest. Bonds are funded from general revenues, and all required transfers from the general fund are to be made when interest and principal payments are due at year end. Now, I will tell you right now, we are not going to get caught up into term bonds, serial bonds, all the various types of bonds. That is not, this chapter does highlight that at length. We're not going there. We have too many other things to cover. I just want you to understand how generally the transactions work. I don't care that we don't understand how a serial bond or a term bond operates. That's not the point here, okay? So the bond premium of $2 million is transferred from the capital projects fund. Do you remember when we were doing the journal entries for in the capital projects fund, how we would show other financing uses transfer to debt service fund? Do you remember that on that end? What's going to happen on this end is cash of $2 million, non-reciprocal transfer in. We could say non-reciprocal transfer in from Capital Projects Fund. If you have any questions, holler. And I'm going to try to slow down, but if I start before you're finished, just say it, whoa. Can I go now?
On to the next one.
The annual budget is recorded. Interest receipts are estimated at $120,000. Okay, guys, right there when it tells us the annual budget is recorded, what does that mean to us? We needed to create the journal entry to show the budget, right? U.S. Government Securities. What do we need to do there? Investments of a debit, $2 million. Credit cash of $2 million. Okay? The next, investment interest of $90,000 is received. As of year end, the city has earned but not yet received an additional $30,000 of interest. It will be collectible within 30 days after the end of the year. This interest is reflected in the market price of the bonds. So again, investment interest of $90,000 is cash of $90,000. We've got an additional $30,000 that's going to come in within 30 days. Can we record it?
Yes.
What if it says within 90 days?
No.
Are you sure? Are you sure?
Right? Yeah.
Are you sure?
Yes.
Next, $11 million is received from the general fund, $6 million for principal and $5 million for interest. Whenever we receive money in from another fund, it's a non-reciprocal transfer in.
But only in debt service though.
Well, let's just say that the general fund needed or the capital projects fund needed some money from the general fund. Still, whenever those transfers occur, when there's not a reciprocal exchange, you know, so it's not as though the general fund owes an enterprise fund money. But it's just, you know, they take this money and they give it to a capital projects fund to fund it. It will always be called a non-reciprocal.
Because the other fund is not paying it back.
There's
no
exactly, there's no benefit derived that's an exchange. Or it's a non-exchange, but it's not getting returned.
Okay.
Okay, next. Interest and principal become due at year end, but owing to computer problems, payments to bondholders are delayed. Now, guys, this is a little tricky, but the point being, it's due, they're paying it, they're saying because of computer problems. I don't think those computer problems are going to last 90 days or over 60 days. Do you understand the key here? The fact that they are going to be paid within current resources, you report those expenditures.
So can you remind me exactly what expenditures is? Like, what's the definition of it? Because I just know that we're using expenditure for a lot of things, and I'm just
Okay,
feeling like
good
there-
question.
That's
An expense is used in accrual accounting
Yes.
to show something that's been used up. Even though you don't necessarily pay for it, an expense occurs when it's been used.
Yes.
An expense occurs even if you receive a bill and you show it as
A liability.
a current liability, or I'm just trying to think of a way we could even show a long-term liability. Depreciation.
Okay.
We have an automobile we're not going to pay off for 5 years.
Yeah.
We depreciate this automobile. It's an expense. Even though we're really not using current resources to pay for that expense, in accrual accounting we do that.
Yeah.
In modified accrual, instead of ever using the word expense, we never ever use the word expense in modified accrual. We only use the word an expenditure.
Okay.
Because the focus with modified accrual is, are we using current resources to pay for current expenditures? Expenditure is just money going out. The money going out could be to pay off a loan. It could be used to pay construction workers, to pay salaries, to pay anything. But we don't call it an expense. An expenditure is just the money we're using to go somewhere. Our focus isn't about really trying to match revenues with expenses because we really don't have revenues. You just click and say, I want money, and click, you get money.
Okay.
I wish.
I know, that's what I say. Doesn't work that way.
So I get it now. All we're doing is basically.
You will
just
always use
substituting the expense word for expenditure
You will always use the word expenditure in a modified accrual,
instead of the word expense.
ever.
Okay, got it. Now
You
I
use the
understand.
word expense on that test, and
Gotcha.
but a full accrual, expense. Okay? It's just expenditures is the term used in modified accrual to show where the money's gone. Next, per GASB interpretation number 6, if the transfer had been made into the fund and payments are required within 30 days, then the entity may, but is not required to recognize as an expenditure. Don't worry. I mean, it's basically, don't worry. I mean, it's the same thing. Let's not worry. Assume,
When you say not worry, we don't need to worry.
don't mess with this. The key I want you to focus on is, if it's going to be within 60 days, you're going to treat it as an expenditure at the time. Guys, if principal and interest are not due until February 15th of the following year, I'm not going to, let's not mess with that one either. We're not, certain things we have too many other things to go over. Basically, this is showing how the accounts get closed, which is the debits and the credits. In most of the problems you are dealing with for homework, you will not do closing entries at all. That's just math. I mean, let's be honest. No. and you will know, you know how I kind of said to you, these are going to be the kind of problems, go through the problems like this.
So we're deleting number 9 too, because we're not going to.
Correct.
Gotcha.
Okay. Now, bottom line is, this is just helping you understand how the revenue, statement of revenue, expenditures, and changes in fund balance looks. Do you see that just like the statement of revenues, expenditures, and changes in fund balance with the capital funds project, most of this is coming in from other financing sources. It's not coming in through revenues. And then we've got here your cash, your marketable securities, and your various interest payments. Again, the key here is not to construct one, it's to understand how we're deriving the numbers. It's important to know that when the fair market value or the current market rate of an investment has increased $2 million, you're going to show that as a journal entry, aren't you? Because they're marketable securities. Any questions on this, guys?
For the 10,880,000, should that be a
Should that be bracketed?
Negative.
Isn't that a deficiency?
10 million.
11,000 is a deficiency.
Okay, so basically, yes, it should be. Thank you. Yes, perfect. So guys, the key here I want you to focus on until Monday is read through those lectures. It'll take you an hour. It really will for all of them. I'll have the final homework problem up today. So chapter 6, you can get the main key is there's one problem on capital projects fund, and it's basically helping you see, you're looking at final statements of budgeted versus the actual changes of statement in the balance sheet, and you're understanding how are the transactions created to get there. That's the key. Then 3 of the problems relate to the debt service fund. Really, if you just follow them, the key here is I want you to understand how you create the entry, okay? That's the focus. Chapter 7, guys, I'll probably cut out 2 of the problems, but I just don't know yet until I get to it. Is that okay?
Yeah.
But every single one of these homework problems will be on a lecture. It's kind of forcing you to go through the lecture, to be honest with you.
So on the template, it shows